Good morning. It's Monday, January 22nd, about 6 a.m. Central Time. Overnight, the precious metals are weaker after Friday's mixed session. You have February gold down $2 at 20.27. March silver down 41 cents, 22.30. March copper down 2 at 3.76. And April platinum down 5 at 9.02. So looking at last week's changes, we had gold down 1.2%, platinum down 2%, silver down 4.4%, and copper up 0.7%. So we had a number of Fed speakers that came out. Fed Chairman Daly said that it was premature to think about cutting rates and that it's really not going to be for a while before they do it. Fed Bostic said he wants to make sure that inflation's on its way to 2% before cutting rates. And on the other hand, we saw Fed Goolsbee said that if the U.S. makes good on its progress in inflation, that the Fed really needs to factor that into interest rates. So you could tell who's a hawk and who's a dove on these different policy meetings. Now, it's important to look that this week kind of starts off central bank, kind of like their earnings week. We're going to see central banks coming out almost on a daily basis for about the next 2 weeks, giving their analysis on where inflation's at and also coming up with their interest rate decisions. So we'll see if any kind of more of the industrialized countries come out and cut rates right out the gate. Could be a clear sign that the U.S. may follow suit at its March meeting. So if you look at gold positioning, this is something that I really look at over the weekend. You know, you look at the last COT report, so go 2 weeks back, and it really showed that net spec and fund longs in the gold market were near one of the highest levels since May of 2022. Fast forward to last week, the positioning for the January 6th showed managed money traders had reduced their net long positions by about 5,600 contracts, and then right now they're net long just over 100,000. The non-commercials and non-reportable sold 10,000 contracts and now still long 210,000. I think that's why that gold is kind of trapped here. It's got 2,000 as kind of an anchor. You got the 200-day moving average about there as well, and the 50-day moving average is acting as your near-term resistance point. Now, if you look at silver down about 4% right now, and really taking it on the chin. Well, at least it was last week. Now it's down about 1.7% more. So the commitment of traders report showed that the managed money traders, the net longs are 6,000 contracts, and they sold 1,800 contracts last week. The non-commercials and non-reportables reduced their net long to 597 contracts to a net long of 40,723. So you look at kind of the picture of where things are at, and they're significantly under exposed to the long side in the silver market in correlation of the gold. And I think the real reason of it is because China's had such a gloomy picture. The Hang Seng had dropped to one of the lowest levels in nearly 2 decades, and it reflects on the gold-silver ratio, which is at one of the highest levels since January 2023. You've got it sitting right now at about 90.89, got up to about 91, 92 in the start of last year. So there was some seasonal weakness that tends to occur in that first quarter in the silver market. Now, if you look this week, we are going to have a pretty data-heavy week. So we've got leading index for December coming out. It's really looking for some significant turning points in the business cycle and where we're at. They showed the cycle, or the index had declined by 0.5% in November. And then later in the week, we're going to see, again, earnings from a lot of different companies here, a lot of the tech giants. And then also you'll see at the end of the week a lot of data coming out here. So it's real important to check your position sizing, things like that. Silver tends to be a little bit more volatile than gold. So if you had purchased that first contract below 23, you're going to want to wait and see if it can dip below that 22 before you consider adding, in my opinion. You look at that chart pattern, it's really provided no real support. We've broken through a couple key levels of support. We're testing the November 13th lows. So throw that on your chart. Make sure your chart extends back to November 13th, and you'll be able to see where that low was. And those prices were really rejected down there. So we'll see if they find that same kind of value and come in and buy like they did before. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.